You're watching the Financial News Network. I'm Chuck Pierce. Google released its quarterly numbers yesterday, posting solid earnings for the quarter of $9.72, up over $2 a share from last year, and revenue grew to $2.73 billion, up from $2.17 billion. The internet tech company beat analysts' expectations for the quarter and is continuing on its growth in the sector. With me today to discuss Google's earnings is Analyst Clayton Moran of the Benchmark Company. Thanks for being with us, Clayton.
My pleasure.
All right, first of all, what do you think of Google's earnings? Is this what you expected?
Well, better than expected. Very strong third quarter results for Google. I think the main number to look at here is revenue growth. And if you exclude the impact of foreign exchange, revenues were up 28% year over year. The street was looking for 25%, so a significant beat and quite impressive for such a large company.
Great. And is there anything specific that Google did to achieve these earnings for this quarter?
Well, what was further impressive is that it was really across the board strength. Their core search business is doing very well, gaining share still from Yahoo and Microsoft, and pushing market share improvements in emerging markets. The display business is really going gangbusters, also pulling share from other online competitors. And then the mobile business is up 150% year over year. So really the three core Google digital businesses are all doing very well.
All right, and I guess specifically we can look into their mobile business. What is so successful in their mobile business right now?
Well, the Android operating platform is having great success and penetrating the mobile device market. It's the leading operating system out there. And really what that's doing is that's driving users to Google's mobile search. Google currently has about 65% of the PC searches in the U.S., but over 90% of searches that are done on mobile phones. So Android's been a success, and that's really helping Google's mobile business.
Now, hitting on some news of the company, there was recently some rumors that Google was looking to acquire Akamai Technologies. Is there any traction to these rumors, and are there any acquisitions that Google should be pressing?
Sure. Well, that rumor was out there. There was also a report saying it was not going to happen. My view is that it doesn't make a lot of sense. It's obviously been something that's been speculated for years now that Google would buy Akamai. I don't think it happens, primarily because Akamai is providing services to a lot of online content companies, many of which are competitors to Google. So for that business to be owned and run by Google seems to be somewhat of a conflict of interest there. I think Google, obviously has been quite acquisitive in its past, typically small tuck-in technology acquisitions, but some real big headline acquisitions such as DoubleClick, YouTube, and Motorola. Potentially more large deals to come. I think companies like Twitter, Groupon, potentially, and areas where Google needs to enhance its position are potential Google acquisitions.
And looking to the future, what are you expecting Google to do in the fourth quarter?
Sure. For the fourth quarter, I think interestingly, the reported revenue growth should come down from the second and third quarter. But that's largely because there's not as much impact from foreign currency. So we're looking for 28% reported growth in revenues for the fourth quarter. In other words, no positive impact from foreign currency. I think the rest of the numbers will be quite similar to what we've seen, about 25% growth in cash flow EBITDA, and also very strong flow through to EPS. We're now estimating $10.30 for the fourth quarter EPS for Google.
And any changes to your rating on Google stock?
No, we didn't change our rating. We've had it rated buy for a while now. We think there's very strong operating momentum, obviously proven again last night. And our price target is $700 per share, which is only 16 times next year's earnings, not a significant premium to the S&P 500.
All right. Well, thank you for your insight, Clayton, as always.
My pleasure.
All right, for more interviews, analysis, and headlines, keep it right here to the Financial News Network. I'm Chuck Pierce.